Good morning, everyone. Welcome to our Turbine Talks webinar. Can I just get a thumbs up from everyone if you are able to hear me? Thank you so much. Good morning once again, and welcome to part 3 of Turbine Talks, the webinar series proudly hosted by SAWEA. And this one is part 3 of From Concept to Closure, looking at legal, commercial, and contractual strategies for bankable wind projects. My name is Mafiwa Ramalebana, and I am the Communication and Design Specialist at SAWEA, and I'm happy to facilitate our final session of this 3-part series. Thank you so much for joining us as we conclude the series focusing on the final phase of the wind energy life cycle, from commissioning through to long-term operations, end-of-life considerations, and the future of grid access beyond PPAs. I'd like to welcome our SAWEA board members on the call, our members, stakeholders, as well as every person on this call joining us since part 1 all the way through to part 3. And of course, if you're joining us for the first time, do not worry, we will have the recordings for part 1 and 2 on our YouTube channel, and that will be shared with you after this session. So in part 1, we explored how projects are structured and made bankable at conception stage. And in part 2, we focused on the execution, contractual, contract inspection phase, risk. And today, we complete the projects are operational and begin to mature in long-term assets within the energy system. And this session is structured around 3 key themes, the first being asset management and insurance considerations, the second being decommissioning, rehabilitation, and life extension legal considerations. And lastly, we'll look at grid access and allocation post-PPA, utility, and regulatory perspectives will be shared. And together, these themes explore how wind projects are sustained, transitioned, or retired responsibly, and how commercial, technical, and regulatory decisions increasingly intersect at the asset's age. So we will be addressing key questions such as how does asset management evolve once projects move into long-term operation? How are decommissioning, rehabilitation, and life extension obligations structured and enforced? And lastly, what happens to grid access, allocation, and system planning when PPAs expire? As South Africa's wind fleet expands and matures, these questions become central to both asset strategy and simply system planning. Before we begin, I would just like to give a few reminders on our housekeeping rules. Please ensure that your microphones and cameras are off if you're not presenting during the presentations to allow the presenter and facilitator the space to do so. You are more than welcome to submit your questions and comments via the Q&A tab throughout the sessions. And the session is being recorded, and the recording and presentations will be shared after this webinar series. To start us off, we move into the operational phase of the life cycle, where wind assets transition from commissioned projects into long-term infrastructure that must be actively managed, monitored, and optimized. And I'll introduce our first speaker, who goes by the name Jared Nivison, who is the Managing Director of iTOO Renew Risk. Jared completed the IISA program in short-term insurance through the UISA and is a life of the Insurance Institute of South Africa. He began his career at Willis Towers Watson, working with multinational clients and engaging closely with South Africa's renewable energy sector. In 2017, he joined iTOO Renew Risk, where he has led the development of renewable energy insurance solutions and supported risk structuring across more than 5 gigawatts of renewable energy projects in Southern Africa. Today, he will share insights into how asset management and insurance considerations evolve over time, particularly as wind farms age, performance profiles shift, and risk exposure becomes more dynamic. Jared, thank you so much for joining us and kicking us off in today's session. Over to you.
Thank you very much. Thank you to SAWEA and everyone joining for this opportunity. I'll just share my presentation. Let me see if you can see that.
Yes, we can see the
Yes.
presentation.
How do we make it big again? So Control L, Vincent. Correct. There we go. Cool. I'll just take you on just a high level overview of the insurance parts to this talk. Obviously 20 minutes is quite a short time frame to fit everything in, but I'll try my utmost. I'll just put my timer on. Quickly, who we are, iTOO Renew Risk. We were founded in 2011. We're a niche renewable only energy underwriter. We specialize in renewable energy only and look after most of the projects in Africa and Southern Africa. But as you can see there, we've recently done the 380 megawatt overbid wind project on a cradle to grave solution. But if we jump into the nitty gritty, what we all hear about. So obviously we can't give you an extensive overview due to the timings here, but I'll just give you, as I see it, from start to finish, what we would look at from infancy of a project through to decommissioning. So location is obviously key, where the turbines are going to be erected, the NatCat exposure and the terrain. I know a lot of the developers and the sponsors and the IPPs have dedicated teams that their sole purpose is to go and find resource-rich areas with servitudes, with good landowners, close to infrastructure, transmission and distribution infrastructure. But that's probably as far as their scope goes. What they probably won't look at is if there's a flood, if it's in a flood zone, if it's close to a river, what happens when it floods. Obviously, the recent flooding here in the Western Cape, most of the Berg River is gone, etc. The recent fires in the Eastern Cape that had some quite close touch points to some of the wind facilities there. Also with lightning in the area. So obviously with the wind turbines being so high up, they're the first point of contact for lightning events. So probably something to be cognizant of the fact that the developers should probably tie that in at the beginning to make sure that it is fit for purpose in all aspects. Ports and roads, obviously with a route survey report, contractors and subcontractors. Obviously we've seen the Murray and Roberts go into liquidation and business rescue. Are there enough tier one and known contractors dealing with these wind turbines and the cement foundations, concrete foundations, etc.? The turbine models and specifications, and are they tier one? Obviously with these OEMs are trying to outdo each other, trying to get to the next biggest size as quickly as possible. And I think they use insurances, R&D test beds, research and development. This is especially on the offshore market where you're getting to 20 megawatt turbine models at a rapid pace. Currently in South Africa, we're seeing 1 to 8 megawatt turbines. Are they type certified from DNV, etc., and have 8,000 trouble-free operating hours at more than one risk location? This is key for leg one and leg two insurance implications that just given you wider cover or less cover. Turbine suitability reports, reviews, load analysis. Are these OEMs running the correct reports for the turbine in that location? I know a lot of these turbines now that we've run out of grid allocation in North, Western, and Eastern Cape. So where they're finding the new places to build their projects, are they suitable for the turbines of that size, that hub height, etc.? What are the ramifications with mountains and hills and wind shear, etc.? Have they actually plugged all of those sort of variables into their analysis? O&M warranty details, projects with warranties and full service agreements should be looked at favorably from an insurance aspect. And then when the warranties expire, then our T's and C's will change accordingly. Obviously, the warranties are picked up by the OEM. And then once that OEM and those warranties have stopped, then it will start to fall onto insurance, and our terms and conditions will change. So as you're going from your first 1 to 5, 6 years, and then from 6 onwards, you should see a shift in your insurance T's and C's. It would be preferred that the wind turbine OEMs are then the O&M contractors, so going from construction into operation. But this doesn't have to happen still. I mean, you can have third parties or in-house O&M contractors, and they're not viewed less favorably. They just need to have a track record, need to know what they're doing. Other key aspects is obviously now, as I touched on with the grid constraints, is transmission distribution and the distance to the next transformer, main power transformer, the size and number of transformers at each project. What is your redundancy? If one transformer goes down, can you evacuate power through another transformer so the entire facility is not down and you can generate at least 50% of your revenue? Thinking ahead and trying to have roaming spare transformers for all of your projects might be a good way to look at it going forward. Supply chain issues and long lead times, as we're all aware of. We're seeing now in South Africa with the advent of grid constraints that a lot of projects are being built in clusters, and so there's an aggregation risk for the lenders, for insurers, for IPPs, and if one of those big 500 MVA transformers goes down, does that mean 5 or 6 projects plugging into it will go down and won't be able to evacuate power? Crane availability. Are inspections done on the LPS and blades to arrive on site before testing and commissioning? Has the LPS been damaged in transit, basically? Has a lightning study been done for substations? I've already touched on the lightning. All these points are not extensive, but they touch into making sure that the project reaches its end of life cycle. Because if these are adhered to, then the project should be avoiding a lot of downtime and issues going forward, and should be able to work at relatively decent availability and get to its 25-year life cycle. Backup power provisions, obviously with load shedding. If the grid is down, can we yawn and pitch the turbines into the right direction to avoid damage during an event, a wind event, if they're all stuck in the wrong direction? Lack of data still. I mean, we've done the first 4, 5, 6, 7 megawatt turbines in South Africa, but some of them are coming in from construction into operations, so we don't actually know how they will operate in country. End of warranty inspections obviously speak for themselves, are a very important aspect of mitigating risk down the line. Inspecting wind turbine generators after lightning events. We find a lot of the lightning events, they're not inspected directly after. They'll just do it 6 months down the line and might see a mark on the blade or a piece of the blade on the ground. So I would suggest doing that directly after each event if you can, and then monitoring it and seeing if the LPS is still functioning after a strike. Condition monitoring. I was recently in France last week at a renewable energy seminar there, where we heard from GE Verona and Onyx that they're factory fitting condition monitoring tools now, not retrofitting them on site. Since COVID and now the Strait of Hormuz, everyone should be aware of global supply chain bottlenecks. These need to be factored into business continuity plans. If we know it's going to take 18 months or longer to procure spare gearboxes, blades, transformers, etc., then we need to somehow, as a collective, come up with a plan to ultimately reduce downtime, reduce loss ratios, keep premiums and deductibles down. Poor maintenance by staff, due to lack of experience, limited CMS, investment and poor resourcing. This is symptomatic of the disinterest in turbine life assets prior to disinvestment or reduction efforts. We also find a lot of lack of root cause analysis to understand issues and for them to be used in the claims process. Framework agreements to reduce lead times. Do the sponsors, the IPPs, have these frameworks in place so they can get ahead of the queues and not put directly at the back of the queues? Operation and maintenance teams' responsiveness to rectify issues before it manifests into a loss. I've got some slides on this later. Pre-agreed replacement times under contract. This is also a very handy tool to have. Proactive scheduled maintenance, often as a result of end of warranty inspections. Additional protection added to protect against lightning damage, but based on site experience. So a lot of these, the IPPs could maybe take out NatCat reports from Swiss Re or Munich Re, so they can have the data and the tools beforehand to see what natural perils are at these sites that they're building or looking at. Turbine manufacturers being proactive about gearbox issues experienced at other sites before losses occur at this specific site. So data intelligence sharing globally. A lot of these OEMs are global big players, so they should know how the specific turbine is working elsewhere, and then to share that knowledge here so they can avoid downtime and issues. Operators' commercial leverage with gearbox suppliers, turbines, blades, included expected future business and new projects, just to speed it up. Projects near the end of life, it can be harder to assess whether this is wear and tear or unexpected losses, which insurance is there for. This is exacerbated by the fact we generally see components fail well before their 25-year expected lifetime. With this in mind, as plants get older, we tend to give more weight to engineering reports to help us understand the current state of the project and what needs to be done to prevent losses going forward. Where a project looks to extend life, we'd be looking at extensive reports, engineering reports, third-party reports to make us comfortable with offering insurance if the project will be extended past its life. As projects get closer to end of life, we see the revenue models change. Generally, the revenue models are used at the beginning to pay off loans, other contracts and debtors. And as the project gets closer to the end of life, these are usually been paid back and it largely becomes profit. So then the revenue models can change. So this gives project owners more flexibility on the insurance they can purchase. They may still opt for full value, but they consider other revenue covers. We jump over to maximizing reliability and long-term asset values. The OEM's performance and market dynamics. OEM performance, as we know, if we look at the news, we can see all the big OEMs. They're either Vestas is profitable, Siemens is struggling along with GE Verona. Industry-wide concern over the new turbines, model reliability, impacting performance and confidence. Ties back to where I said they're just trying to develop these projects and outdo each other on size, and so they don't really know how these turbines are going to be able to fare. 75% of new operators rate turbines as fair or poor. The key failure points are blades, gearboxes, and bearings. The root causes rapid design rollouts, supply chain constraints, and quality issues. Older turbines, these can be undervalued because mature turbines show more stable and predictable performance. They face reduced OEM support, increased maintenance complexity and costs. Significant upside though is you can extend these because you know how they're performing. You can upgrade using advanced diagnostics and condition monitoring. We shift to data-driven asset management. So when I was in France recently, there was a big shift towards the CMS and the data management and predictive management AI tools that these turbines can leverage and have in-house. Operators increasingly use the predictive maintenance, condition monitoring, and data analytics. to optimize performance, extend the life, and reduce failure, which is, I think those are 3 key points there. O&M pressure points, 30% of operators exceeding O&M budgets. The key challenges, spare parts again, shortage of skilled technicians, and inconsistent service quality. We have seen a change from the traditional OEMs going on to the O&M into now hybrid models and in-house O&M capabilities. Obviously, the benefits is greater operational control, improved turbine availability. You actually have a know-how of what's going on with your assets. We generally find that the OEMs keep it quite close to their chests. Digital tools to improving this, the adoption of shadow monitoring. So you can have the OEM still perform their function, but you can also install another SCADA sort of CMS system to shadow monitor them and make sure they are doing what they're supposed to be doing. Predictive analytics, we close the data gaps and enhance decision making and maintenance planning. Bathtub curve is quite self-explanatory. First stage of the project through to the middle, and then as it gets to years 8 and 10 and beyond, you will start to have end of life and failure issues. These are typical onshore scheduled O&M costs. Blade replacement is quite high there. Gearbox, another big one. As we go into the mature turbines, fleets, this is probably in South Africa at the moment. So obviously got a lot of newer projects, but maybe some of the round 1 and 2 projects are coming into this sort of life cycle now. But they are stable, predictable performance. We know their availabilities, we know their failure rates. So we've got a deeper operational understanding that makes them strong candidates for efficiency gains. But with the older turbines, you'll see a decline in the OEM support as they shift to newer models, bigger projects, leaving mature assets under-supported. Known issues can be addressed through up-tower repairs and targeted upgrades. Missed opportunity to optimize existing fleets despite available expertise. You can unlock through modern approaches, predictive maintenance again. So this comes up quite a lot with the advent of AI, and you can just see how your turbines are working and obviously extend the life or make sure a perceived issue coming down the line is stopped before something catastrophic happens. Operational challenges, obviously obsolescence of parts globally as a lot of these projects are getting older, these parts are no longer available. Reconditioning parts you can get, O&M decisions becoming more complex, balancing cost versus the remaining life extension. Early adoption of LEPs is critical. You can use the tools that we've spoken about here today, smarter maintenance, parts planning, improved safety, and enhanced learning and performance. Catching an issue basically before it happens. Here is in a real-world example. It's a gear failure seen in vibration, but it was missed by the OEM. What are the biggest challenges in dealing with older turbines? Looks like their spare parts procurement is a big challenge. Frameworks. Oh, I've only got 2 minutes left. There's 20 minutes. This is also self-explanatory, which I can go through. You obviously got your full service OEMs. You've got hybrid models now, in-house self-perform models, and obviously a touch point here is end of warranty inspections. I mean, this is a critical milestone for any wind project and represents a final opportunity for asset owners to identify and rectify defects. Like I've touched on before, with the advent of AI to constantly do conditioning monitoring to observe the health of the WTGs and pick up early sign of component failures is key. I don't want to take up other speakers' times, but there's a lot you can see here that is to do with preventative maintenance going forward in aging turbines. This is some micro pitting identified during endoscope, but this also, once again, this led to a claim that could have been picked up before this had happened. Wind farm life cycle, obviously build, operate, repower, life extension, or decommission. This is what we're seeing with blades. They go into landfills. They're just left out in the deserts. A couple blades have been turned into bridges. I like the idea of the power structures, especially with the IPT in South Africa coming. And then decommissioning insurance. We don't deal with actual decommissioning and rehabilitation. I think our speakers later will touch on that. But we can assist with repowering and decommissioning and liability insurance. Decommissioning obviously is still in the very early phases around the world, and especially in South Africa. So none of our projects have reached end of life yet. So we can do environmental impairment liability, covers pollution, dismantling, to do cover for damage to, sorry, there's my end of time. Covers for dismantling, operation, physical works, decommissioning of the works, taking down the projects, debris removal. It's basically a contracts work policy, but works in the opposite direction. We can get insurance for the cranes and the lifting equipment, transport risks. Yeah. There's no mature standardized decommissioning insurance in South Africa yet, but we partner with global reinsurers in London and America that have seen decommissioning on their projects around the world. So we are here to assist when the projects get to that stage of their project. Insurers are supporting the risk framework, not actually carrying out the core decommissioning. So I'll just skip to thank you. Don't want to take up any more time. Sorry, a very high level and quick 20 minutes is short, but hopefully I'm here at the end to answer any questions, and we're always available. So thank you very much.
Thank you so much, Jared. Yeah, I think you did your best to keep within the time, but with the time you did have, you gave us quite a lot of insightful information. And I think the biggest thing that was highlighted here is how operational assets require continuous risk assessment, or risk awareness rather, and structured management approaches to maintain performance and protect value, and I'd say support long-term sustainability. So thank you once again, Jared. And for everyone on the call who has questions for Jared, you are more than welcome to pop them into the Q&A tab, and they will be addressed at the end of the presentations. So building on the operational foundation laid by Jared, we now move into the legal dimension of the life cycle, focusing on how end-of-life obligations are structured and how decisions around decommissioning, rehabilitation, and life extension are governed. And to kick us off, we have Nomathemba, Nxele, who joins us as an admitted attorney and in-house legal professional at Inlexso. I hope I said that correctly, Nomathemba. She has extensive experience in commercial and project-related legal matters within complex renewable energy infrastructure and construction environments, with a focus on contract drafting, negotiation, regulatory compliance, risk management, disputes, and operational legal advisory. Her work involves balancing legal frameworks with commercial and operational realities, engaging with contractors, lenders, regulators, and internal stakeholders under complex project conditions. She is recognized for her structured, solutions-driven approach and her ability to translate legal obligations into practical project execution realities. And today she will guide us through the legal considerations around decommissioning, rehabilitation obligations, and life extension, and how these are embedded into contractual frameworks and regulatory requirements from the outset of a project. Nomathemba, whenever you are ready, over to you.
Thank you so much. Can I just quickly share my screen?
Oh, no problem. We can see your screen.
Thank you so much. So I'll just get into it. Thanks for the lovely introduction.
You're welcome.
So today, as it has been explained, I will be focusing on what happens when renewable energy projects move from being active or from actively generating power to closure, life extension, or repowering. So this is usually at the end of the PPA. This is becoming more important as the South African renewable energy sector matures And as owners, landowners, regulators, and financiers will soon all start asking the same question, which is, what is the responsible way to end a project's life? As it was already stated that we haven't reached end of life yet as South Africa. So it will be very interesting to see what's going to happen. And then the short answer to that is that end of life planning is not a technical afterthought. So it is something that needs to be embedded in your planning from conception. You know, from the time you reach financial close, it must be part of your planning because it is very legal. It involves a lot of environmental compliances, financials, and land use exercises that should be built into the project's life cycle from the beginning. Why is this important? Why does this matter? Renewable energy projects are often discussed in terms of capacity, grid contribution, and commercial viability. However, the projects don't stop having obligations once they stop producing power or at the end of the PPA term. So there is post-decommissioning obligations that the project still has to oblige with. Then in many cases, the most sensitive and practical question arises at the end of the project's life when decisions must be made, whether are we decommissioning, are we repowering, or are we extending the life of the asset, meaning the way to deal with the asset post the 20-25-year life cycle of it. And that planning, in most cases, it is done too late. The risks become very immediate when the planning is not done from the start of the project. End-of-life decisions affect compliance, they affect finances, they affect land use, and they affect the reputation. And then the project may face compliance gaps, under provisioning for closure costs, thanks that now we are looking into having insurance for post-closure and decommissioning that will come in very handy and it will be very useful. There may be disputes with landowners. There may be delays in approvals because it's not just ending everything. We still need approvals. We still need to comply with certain obligations, especially from an environmental perspective. And there may be a lot of uncertainty about rehabilitation standards. Sorry, can I just go back to the previous slide? Okay, and then the point is end-of-life planning should be part of asset protection and not just environmental compliance. So we need to consider everything holistically and what does this mean or what are the next steps that we can take. South Africa's early projects, we have one early project, which is the Darling Wind Farm. It recently turned 18 years this year on the 1st of May. It is said by the DFFE that it was the first grid-connected energy power generating facility. So with that being the oldest, it is clear that we have not actually experienced end life cycle as South Africans. But as the years go by, in the next 5 to 10 years, we will start to see more assets begin to mature, you know, and we'll see the first generation projects approach important life cycle decisions. The industry has a bit of a window to properly plan for these events before the first wave of closures arrive. So we need to look into the insurances that we can take. And I think that we can also learn a lot from the mining industry since they have experience with decommissioning and rehabilitation for mines. And we must appreciate that for now, we will learn from international energy players, and we are yet to set our own practices and precedents on how to handle end-of-life properly. So it will be fun and games in courts as well as people battle on what to do and what needs to be done and what the law says and everything. Then considering the legal framework, it should not be treated in isolation. It is a regulatory bundle. The legal framework for renewable energy projects sits primarily within the environmental and planning systems. The DFFE Renewable Energy EIA guidelines is a very useful reminder that energy projects must be assessed in line with the NEMA and the broader environmental authorization process, with impacts identified and mitigated through the EMPR and related approval conditions. The closure phase is usually not addressed in a vacuum. Decommissioning obligations may be found in the environmental authorizations, in the EMPR, in site-specific approval conditions, and in related legislation such as the waste, water usage licenses, heritage, planning, and land use laws that govern the entire project. And obviously, this depends on the facts of the project. So when people talk about decommissioning, they are really talking about a regulatory bundle, not one as isolated rule. What exactly is decommissioning? So decommissioning is not simply taking down a turbine. It is the structural removal, it is the management, and it is the replacement of project infrastructure at the end of its life. So at the end of the PPA, then decommissioning kicks in because it is believed that it's the end of the life cycle of the turbines or the wind farm. This can include, or this actually usually includes the removal of the turbines, the foundations, the cabling, the substations, the access roads, the handstands, temporary laydown areas, and other associated works. Decommissioning also includes the safe shutdown and ceasing of operations and safely managing hazardous substance. So health and safety is still important. Health and safety still plays a huge role even when decommissioning takes place. The legal issue is that the site cannot simply be abandoned once it is no longer economically attractive and has reached the end of the PPA. The seller or operator still has to comply with the EA conditions under which the project was approved. Sorry, can you just go back to the previous slide? So the seller needs to comply with the EA conditions under which the project was approved and with the rehabilitation duties that flow from those approvals and from environmental laws in general. So what does this mean in practice? This means that closure strategies should be documented, they should be costed, approved when necessary, and they need to align with the project's approved environmental commitments. When we look at rehabilitation and restoration, so rehabilitation is not just the removal of all the visible infrastructure. Once the site is cleared or decommissioned, rehabilitation aims to repair the environment footprint and the landscape, meaning everything must be as before the project actually started. Restoring the site to a condition that is environmentally acceptable, that is stable and consistent with the approval and use and regulatory expectations. It involves soil remediation, it involves erosion control, reinstatement of drainage patterns, recontouring disturbed areas, removing or repurposing excess infrastructure, and managing and residual waste streams. In some cases, long-term monitoring may be required in order to confirm that rehabilitation is actually working and that the restored environment can sustain itself. So rehabilitation is also not a once-off, everything is as good as back to what it was before, but it is something that can be long-term and that needs to be constantly monitored to ensure that the environment can actually sustain itself or can restore itself to what it used to be. There is actually financial considerations that need to go into planning. And the financial provisioning is one of the most important points for owners and lenders alike. A renewable energy may operate profitably for long years, for many, many years, usually 20 to 30 years, depending on the term of the PPA. But the end of life costs can be significant if it is not well planned for. Decommissioning, rehabilitation, waste management, professional oversight, permits, application, and monitoring all need money. So there has to be monetary planning that goes into decommissioning and rehabilitation. And if those costs are not properly anticipated or properly planned for, the project can reach closure with a funding gap at exactly the moment when it is no longer generating meaningful revenue. So once again, your insurance will play a very critical role in this. Financial provisioning should be reviewed well before decommissioning becomes imminent. In the space that I'm in, the financial provisioning of decommissioning is part of our financials. It's either we have a fund that caters for the decommissioning, or there is a way that the finance people do it to make sure that we cater for decommissioning. And the purpose of this is not just to satisfy a regulatory checklist, but to ensure that the seller, my slides just keep moving. And to ensure that the seller can meet its legal and environmental obligations without creating residual liability for itself, the landowner, or the wider project stakeholders. So with that said, a closure budget should be conservative and regularly updated. This means that you need to take into consideration inflation, site-specific conditions, contractor availability, and the possibility that rehabilitation may be more extensive than initially anticipated. Another option to look into is repowering and life extension. Not every renewable energy project should be decommissioned outright. In many cases, the better option may be to repower or to extend the life of the asset. Repowering may preserve site value. It may improve efficiency, especially with where technology is headed. So that might come in handy, and make use of existing grid infrastructure. It is not a simple equipment replacement exercise. So this is important that we bear in mind that it's not just replacing old turbines with new turbines, because this may trigger fresh environmental authorizations. It may need updated approvals. It may need revised land use arrangements and renewed consultation with affected stakeholders. While repowering can be commercially attractive, it still has to sit inside legal and environmental frameworks. A recent case in Scotland of repowering in Hawkshaw Hill. It was repowered after 30 years, in 2025 last year. And what they did is they removed the 26 older turbines, recycled the turbines to form other parts within the plant, and those were replaced with 14 larger turbines. So they did not only just replace everything, but they made the plant to function better. So the 14 turbines were able to generate 5 times the previous power output that they were able to generate. So again, this takes us back to how technology is advancing and what repowering might mean for most of us. Hence, we need to go back and revisit our environmental authorizations, our land use rights, and everything to make sure that we are still in compliance. There are land use and agricultural considerations. While renewable projects are often located on land that has agricultural value, conservation sensitivity, or competing land use expectations, end-of-life decisions are not only about the structure of the asset, but also about the future of the land itself. While rehabilitation restores degraded land, Padala strictly regulates how high-value agricultural land is used, protected, and potentially rezoned. This is where most of the issues, I believe, will come from once Padala comes into effect, which will be replacing SALA. Everything that we do, we now need to comply with Padala. And Padala seeks to preserve agricultural land because they see that, you know, renewable energy is moving very quickly and they're taking over land that can actually be used for our own ecosystem. So Padala seeks to secure food safety and our ecosystem. As I said previously, that we will see a lot of court cases that will emerge once Padala comes in and we reach end of the cycle with a lot of these renewable energies. And then wind and solar projects require large expanses of land. And Padala has established what is called PAAs, protected agricultural areas, where certain areas will be declared to be protected under the Padala. And this heavily restricts or detects non-agricultural activities to prevent the fragmentation of the agro ecosystem. The seller must consider how land, sorry about that. The seller must consider how land will be returned, how servitudes and land rights will be handled, and whether repowering or continued occupation will remain consistent with the applicable land use framework. So in some cases, the landowner may not want restoration or agricultural use. In others, the land may continue in energy use. So this is also about the preservation of the rights that the landowner has. Either way, the legal and contractual position needs to be very, very clear. A closure strategy needs to be technically sound and landowner friendly for it to be sustainable. Common risk areas that we will see if we are not well prepared include late closure planning, which will affect costs and which will affect compliance obligations, outdated approvals being assumed to be enough, which is not the case. There might be a need to revisit the approvals and actually get proper approvals or new approvals that now cater for closure planning. And then repowering treated as a shortcut, which is also might be a very common risk. It is not a shortcut. It is not something that can be done in a period of a year, but it might take years for the place to be properly rehabilitated. And then poor cross-functional shortcuts. This is now the functions across the different stakeholders that are involved. What is good practice? How does good practice look like? It starts early. Planning starts before the end of life. Ideally, decommissioning and repowering should be discussed years before the asset reaches the end of its first life. The project should have a living closure strategy that is reviewed over time and not created at the last minute. It also means documenting responsibilities, who has to do what, very clearly, who owns the closure obligations, who pays for what approvals are needed, what standard of rehabilitation is expected, what does the landowner require, what will the regulator expect. Those questions should all be answered before the project reaches a critical point, which is the end of life. Good practice also means keeping the closure approach proportionate to the site, not not everything will need the same level of intervention, but every site should have a clear, defensible, and lawful pathway to closure, life extension, or repowering. So it's proper planning. In as much as we plan for the plant to go live, we also need to put in the same energy into planning on what needs to happen at the end of the life of the plant. So in closing, end-of-life planning is part of the project design, or rather should be part of the project design. This will help with protection of compliance regulations, restoration, preserving of the value, and it helps with flexibility whereby you'll have options whether you are decommissioning, rehabilitating, or repowering the plant, or you're deciding to extend the life of the plant. Good closure planning creates opportunities for repowering and sustainable land stewardship. So without proper planning, you will have a very hard time when the project reaches end of life.
Thank you.
Thank you so much.
Thank you so much, Nomathemba. I think the people online will agree with me when we say this was very clear and practical. And I love how you closed it, because that's exactly how I understood it throughout the presentation, that end-of-life planning is not an isolated phase. It's actually embedded in the contractual obligations, the regulatory expectations, and the long-term project structuring decisions from the very beginning. So thank you so much, Nomathemba. And if anyone has questions for Nomathemba on the legal perspective, you are more than welcome to drop your questions in the Q&A tab, and we will address them shortly after our final presentation, which will be taken by our final speaker, who will shift us into system and regulatory perspectives, focusing on how grid access, allocation, and post-PPA arrangements are managed, and what this means for future system planning and repowering opportunities. And we are now joined by our third and final speaker. Closing out the entire series for us as well is Mr. Michael Melsheimer, who is a senior consultant at 8.2 Consulting AG. Michael is an experienced wind energy engineer and technical expert with more than 25 years of international experience in consulting, inspections, commissioning, and condition assessment of wind turbines. He specializes in technical due diligence, vibration analysis, component inspection, and acceptance testing across global markets, with project experience spanning Europe, Asia, the Americas, Africa, and Australia. He has held multiple senior leadership roles in wind advisory and engineering organizations, and has contributed extensively to the global wind industry through publications, technical innovation, and advisory work. And today he'll bring a system-oriented perspective on how operational wind assets interact with grid infrastructure over time, and how considerations around grid access, allocations, and post-PPA conditions influence repowering and future system planning. Michael, whenever you're ready, over to you.
Yeah, thank you very much for the opportunity to speak here. Let me share the screen first.
Okay.
And I think you can see the screen
Yes.
now. Let's bring it to make
yes,
it a little bit bigger, and then we are there. Okay. The topic today would be lifetime extension, which fits exactly in the line of that what Jared and Nomathemba already speak about. And very quickly, I want to introduce you the 8.2 network to you. 8.2 is operating since roughly 30 years. We have more than 40 offices worldwide, mostly in Europe, but also in South America and in Asia. And yeah, we would also like to come to South Africa. However, we have not been there with an office, but of course we did already inspections there. We are one of the largest organizations in Europe or worldwide who are doing inspections on wind turbines and also consulting services. Our group expertise is in that knowledge of all kinds of wind turbines, of solar and biomass. And I won't bother you too long with the 8.2 areas of expertise, but today we will talk about lifetime assessment and inspection of wind turbines. I want to mention that we are an accredited institution with ISO 17020, and we are doing these inspections in Germany regularly. So, lifetime extension of wind turbines. This is a topic which is becoming globally relevant. And in Germany, as we are operating wind turbines since such a long times, we have already gathered some practical experience. And of course, South Africa has the opportunity to benefit from that knowledge early. So why this topic matters? The speakers before already mentioned the first large global wind fleets are aging, and the capex for new turbines is increasing. So grid connections are highly valuable. Repowering is not always feasible, and the ESG and energy security considerations are growing. 20-year-old wind turbines are not automatically at the end of its useful life. We are coming to that later. I want to introduce you to German framework. Yes, here it is. Yeah. In Germany, usually turbines have a 20-year feed-in tariff period. This is usually in line with the calculated lifetime by the type certification, which is provided by the OEMs. We have periodic inspections, we have requirements of the insurance, and we have responsibilities of the operators for the wind turbines. With all that, multiple authorities are involved. Germany is not a unique place where the rules are all the same. Every federal state in Germany has its own regulations, so we have to review a lot of documentation and look into it, what they mean with their permittings. And we also have a very conservative safety philosophy. The lifetime cycle of a wind turbine, we have put that here into 4 tiers. What we have here is, wait, I need to have the laser pointer here. So the tier 1, that's where you are right now in. This is the certified design lifetime. Usually for older wind turbines, this is around 20 years. For newer wind turbines, we see more often 25 years. Then there is a second tier. Of course, after this 20 years, not all turbines are worn out. So with some engineering validation, you find an extension of lifetime, which is relatively easy, yeah, because not all turbines were operating full. Your turbines you erect were not exactly in the IEC class that you have on site. So usually you have a higher IEC class. So that creates a little gap where you can extend the lifetime very easy. Then a third tier is there with some assets renewable and managed extended lifetime. You can go there with relatively low investments. And the fourth tier, you have higher investments, and you can go then even longer. What this is, you can see in one of the next slides. I will come to that. But that all comes with some risk for the lifetime extension. So what we have here is, you see tier 1, of course, structural, mechanical, electrical, economic implications. So basically, on the risk side, you are all green. In the second tier, yes, there are some risks, mechanical and electrical, but they are manageable. As I already mentioned, with relatively low investment. Now, in tier 3 and 4, you have investments. So, and that all depends on how much you want to invest. It depends on the turbine type, and it depends on the site. Just to mention a very few. Already mentioned earlier in the presentations, you have higher risks for the availability of spare parts, or you have a higher probability for failure of main components. So I think talking about that all goes without saying. If you invest more, you can get out more. But this is all an economic model. You have to calculate for yourself if it's feasible to do that, or going to repowering or decommissioning. So what does lifetime extension really mean? Technical. That means we are focusing on structural remaining lifetime. This is done with fatigue assessment, load history, and component wear. This is reviewed there. And the German lifetime extension process is mainly split into 3 parts. First of all, there is an assessment, like a document review, the site evaluation. We make simulations for the lifetime of the wind turbine. And the more exact your models are there, the closer you can get with your calculations to the lifetime you can get out of the wind turbine. And the risk assessment is done, and the identification of critical components is done. With having that information, we can go into the practical inspections. So inspectors go to the wind turbine and see if or they revisit the turbine completely, however, especially at the condition of the critical components, of course. And we will evaluate the operational history. Are there operational gaps? For instance, if the turbine had, for any reason, a longer standstill time, then of course you can use this standstill time to extend the lifetime of the turbine. Or if you have, for instance, curtailments in your power curve, then you have not used your turbine that extensively as you had done as it was planned. This means you can operate usually your turbine much longer. And the operational measures are repair, exchange components, and this is quite often we find out that bolting connections of the blades are limiting the lifetime of the turbine. But these are some parts which can relatively easy replaced, and with our calculations we can even say which bolts you need to replace, so that they can extend their lifetime to, let's say, up to 40 years. Or then very often, secondly, the blades are something which is limiting the lifetime, but even blades can be replaced. This is all something you need to calculate economically. Or operational measures can be load reduction. You find a strategy for that. Operational conditions or tighter inspection intervals to see if there is a higher wear, or finally condition monitoring or measurements that also can help to extend the lifetime safely. Which standards do we have? In Germany, we have very good publication from the BWE, that's the German Wind Energy Association. It's also available in English. And there is exactly described how we should evaluate the lifetime extension for wind turbines. Basically, in Germany, on all building structures, we have the DIBT guideline, we have the IEC 61400, GL, DNV standards. Of course, insurers also have something to say in this process. We have the certification bodies, and last not least, we have us, the independent experts. So as you can see, lifetime extension is a very interdisciplinary process. Yeah. So what we can see here, we have here two things. We compare the lifetime extension, repowering, or decommissioning. The key parameters are the costs, let's put it like that. And I have here a table for you where you can see where we have a sample turbine in the 2.3 megawatt class, and we have here some components, and here we have the calculated lifetime. And here you see we found out that the limiting factor on this turbine at this place where the turbine is installed is limited to 23 years of lifetime. So if you replace the bolts, you can have another 23 years. And then the next limiting are the blade roots. Blade roots, yes, that's something you can't replace themselves. Usually you have to replace the blades completely. Your choice if you do that with reworked blades or new blades. New blades are often not available anymore. because of the age of the turbines. But most other components like hub, main shaft, nacelle, tower, foundations, operating more than 40 years. If we have a result which is higher than 40 years, then we limit it to that, because the calculations done right now are probably not that exact, that we can predict, let's say, 50, 60, 70 years of lifetime. But we can say clearly, yes, 40 years, that's something where we can go. All right. Of course, nothing comes without the risks. And the risk can be technically already explained by Nomathemba, liability, insurance, by Jared already mentioned spare part availability, but I also want to mention cybersecurity, and SCADA is also something which all turbines are sometimes not really ready for. And already also mentioned was the supply chain risks. And of course, regulatory can change over time. And also already mentioned by Nomathemba was, first wind farms will become relevant in South Africa very soon. And there's a lot to consider. Grid constraints are also increasing, permitting timelines may become longer, and stable generation is something very strategically. And of course, spare parts. The differences between Germany and South Africa are there. We have different conditions in wind, in climate, in grid, in regulatory, also availability of skilled personnel, and the spare part logistics. But I want to say it's not that really huge difference. And what is transferable? I would really recommend that you look very close to experienced markets in Germany, how we handle that. And you take the best of it without that really big documentary process. Focus on structural integrity, public safety, and good reliability. And without the full regulatory complexity of Germany, which is sometimes really annoying, we have to review for every turbine thousands of documents, which all need to be considered in relevance. And this takes quite a time of our work, which has nothing to do really with the technology of the wind turbine. So it's all regulatory work, and even some authorities say, yeah, you can do that, and others authorities say, no, you cannot do that. And there is no general logic, but you have to follow the rules. Not forget to mention lifetime extension in the context of M&A. It goes without saying, the more lifetime you have, the more value your wind turbine has. So a remaining lifetime is an asset, and that you can calculate against what do I get with repowering? Can I do repowering? Can I get insurance? And so on. So you need to do technical due diligence and see what do I have here, and what's the value of it? I'm not so sure how the South African market is structured and who owns the wind turbines, but in Germany, this is quite a very big thing. If you have wind turbines there, which are operating, they are good for a very long life, then of course you have a very high asset value. All right. Coming to the end, the takeaways are lifetime extension will become relevant globally. Germany and 8.2 can offer valuable experience, and South Africa can define efficient standards early, and the economic viability depends strongly on the risk assessment you do. M&A and financing activities will increasingly drive the topic. Thank you very much, and I will give the word back.
Thank you so much, Michael. Thank you so much for giving us this insightful international perspective and connecting the operational reality of wind assets with the broader system and regulatory considerations, especially as grid access and allocations become more important in shaping post-PPA strategies and the long-term energy planning. So thank you so much, Michael. Colleagues, we will now move into the Q&A discussion. So I would like to just quickly hand over to my colleague Vincent to facilitate the interactive Q&A session, just noting that we do have a couple of minutes remaining, but I know that we do have a couple of questions for all our presenters. Vincent, over to you.
Thank you, Mafiwa. The first question goes to Jared. Jared, is the current offering from insurers only asset loss, or is it loss of revenue, business interruption cover, is that also considered? The second one is, are specialist reports approved EAs required as part of due diligence? And thirdly, how is curtailment taken into account for loss of revenue if this cover is available?
Thanks, Vincent. You could have just gone one at a time. Yeah, I mean, for iTOO Renew Risk, we offer all all insurance classes for a renewable energy project. So wind will do the marine cargo, the marine delay and startup seamlessly into the construction or risks covering the physical assets and the revenue. If the project doesn't reach commercial operation time as scheduled, and then there's a delay and there is a debt repayment back to the lenders and the banks, we will pay that revenue back to the banks. Say if the main power transformers dropped off the ship or onto the roads, or a few of the turbines fall into the ocean, and then seamlessly into the first year of operations, mechanical, electrical breakdown, liability, associated revenue covers for the entirety of the project, the life cycle, the 20-year PPA, or the 25 to 35-year life of the project. We offer those covers throughout. Like I mentioned in my presentation, you don't have to always take out the full covers as the projects age. You might not be able to get the replacements of that particular make and model, so you can get a cash value. Because you can't get a replacement for that, then you just take the cash, decommission that turbine, and hopefully repower with a bigger one back when it's ready to do so. Also, with the revenue models, they will change as the revenue changes with the project. Some projects obviously have a higher yield at the beginning, P90s, P70s, but they might not actually ever get to those sort of levels. So you can change the revenue models once you've paid back the lenders. With regards to curtailment, curtailment is in the framework of the NTCSA and the project, I think it's a contract between themselves, so that wouldn't be a revenue claim for insurance, because you need to have a physical loss at site to trigger the revenue cover. So you'd need to have a natural catastrophe event, a windstorm, a fire, a flood that would take down critical parts of a plant and therefore affect the revenue cover. Just because there's a contract between two parties that could tell the project, that wouldn't trigger a loss in revenue. You might be able to buy a guarantee for that, but we are on the assets and revenue side of the insurance aspect of these projects. I'm not sure what the second question was, Vince.
You actually answered that already with some of the insurance legs covered, but it is basically...
I knew that.
Specialist reports or approved EAs required as part of due diligence, since they may have environmental impacts that could cause temporary shutdown during operation and thus potential loss of revenue claims.
Once again, I mean, we wouldn't look at the sort of those environmental impact reports. I mean, they are sent to us, but that is in the legal scope and the scope between the landowners and government, etc. Obviously, if a project didn't pass those, they wouldn't get to the sort of final stages of getting a project to financial close. But if a project, I think there was one in the news recently that was started to be built and then they didn't have the right permits, etc. Once again, that is not an insurance claim. That's a business risk. That's poor due diligence, I would imagine, and there's no physical damage to trigger the policy in high level. Yeah, that answers that.
Thank you. Then just another one related to an increase in occurrences and intensity of veld fires and floods in areas with high wind farm development. How have these risks been quantified in the risk profile? Inclusions, exclusions, endorsements of these sites?
So like I touched on in the presentation, these are some of the key aspects we look at right at the beginning of a project before we potentially look to insure it. Is the project close to a river? Is it in a flood zone? Is there lots of lightning in the area? Is it susceptible to wildfire? We all use different NatCat models, global models. We'll use other sort of tools we have at our disposals. And then we will assess that. And if there's a perceived risk from lightning, wildfire, or flood, we will then tweak our terms and conditions to suit that profile of that project. So it's not a portfolio basis, it's a project-specific basis. So if there's flood, we'll probably sublimit it so you can't get full cover, probably have higher deductibles. Conversely, if there's no flood, then you'll get full flood cover, no flood deductibles. Same on wildfire, etc. You do have LMA clauses, which are Lloyd's London market clauses for wildfire, etc., which we can incorporate into the policy. And this sets out sort of fire breaks, where you can smoke, where you can't smoke. Generally not too fussed on a wind project because of the turbines are so far apart. A lot of the ground around a turbine it's quite benign and arid, and they've had the laydown areas, they've had a lot of dirt roads there, so it's not very flammable per se. But having those recent fires in the Eastern Cape, I mean, if that does, or like in Los Angeles, if it does get out of hand, it can engulf a whole facility. But that's why we underwrite early. We underwrite before claim stage. We underwrite the project before it's even broken ground. And then we're comfortable with our capital we have deployed and the terms and conditions we have provided. We obviously know that natural catastrophe and climate change is happening. So every year we will review our project if it has changed its sort of the parameters with wind or hail or wildfire or flooding, etc. So case by case basis, year by year basis.
Thank you, Jared. Appreciate it. Question to Nomathemba. What differences in the level of requirements and risk exist between the typical REAP public procurement versus private procurement projects? Or have most developers or IPPs adopted the REAP structure as the standard?
Thank you. So there's still generally a huge difference between the REAP style projects. However, we are seeing a move more into adopting many REAP principles into the project, especially when considering the bankability benchmark. However, because most private offtake projects are more commercially high risk, so it's a matter of what's the word? Fine tuning the risk allocation. So yeah.
Thank you. Then the next one, maybe as a follow-up to that, is there a particular evolution the legal fraternity is noticing for the private, as the private market matures, predominantly in light of REAP private and now the newly liberalized market SAWEA, that also might take a different shape and form?
Yes, I really think we are advancing and we're looking more into international markets, trying to take some trends from there that will work for us. So in the next few years, we will definitely see an evolution as we adjust to what's also happening around us.
Thank you, Norma. A question to Michael. Is there a percentage split between the number of projects life extending versus repowering? And how do you think grid constraints in Germany is one variable influencing the German model aligned with that?
Sorry, what was the first question?
So the percentage split of projects that are reaching end of life, but how many of them are considering life extension versus how many of them are actually repowering? And do you think grid constraints in Germany is playing a role in that decision?
Yeah. I have to split these questions a little bit up. In Germany, we have turbines, very old turbines, which are operating now in areas where you cannot put new turbines because new decisions say, okay, we want to preserve these areas, we don't want to have turbines there, but you have a permit to operate there, and the only way to operate turbines there in these areas, if you still have them, is to extend the lifetime. In most other areas, land in Germany, we don't have much. So we are mostly looking into repowering those wind turbines. So put 10 turbines down, replace them with 3, 4, or 5, make them bigger and have more revenue out of that. However, when it comes to that point, you have to, many operators look for a certain period of time, how they can operate their old turbines until the planning and supply chain for the new turbines is ready so that you can put some there. I don't really have a percentage, but we have a lot of turbines which are going in extension. But right now I see that the spots for wind turbines have a high value. So we have the tendency to repower them more often than just keep them for lifetime extension. But it depends on case to case. So I would say from my feeling I have here, 2/3 we repower and 1/3 we do lifetime extension. But we do lifetime extension to shorter periods, not longer periods mostly. Yeah. And the second part of the question was, what was it?
It was if it was grid related, the fact that
Grid related. Actually, no. Because the grid in Germany we have is quite good. However, we have other constraints. In some areas, our grid cannot take up power right now, but this has to do with delayed planning and delayed constructing of reinforcing the grid. The tendency is to strengthen the grid for getting all this energy in, and we want at least to double our wind farms we have right now. The capacity, I mean.
Okay, perfect.
So grid constraints are not really a big issue in Germany.
Understood. Thank you for that, Michael. Mafiwa, in essence of time, back to you.
Thank you so much, Vincent. And yeah, ladies and gentlemen, we've come to the end of our final part of the three-part Turbine Talk series, Concept to Closure. And I'd like to just thank all our speakers for sharing their expertise and to all of our participants for your engagement throughout the series. I think across the three parts, we followed the full wind project lifecycle from concept to structuring, execution and construction into long-term operations, end-of-life planning, and grid transition. And what becomes clear is that wind projects are not linear developments, but evolving assets where early decisions shape long-term outcomes, and where operational, legal, and system considerations are actually deeply interconnected. So as South Africa's wind fleet continues to mature, the integration of asset management, legal frameworks, and grid planning become critical to ensure a stable, bankable, and future-ready energy system. And just a reminder to everyone on the call, the presentations and recordings will be shared with all attendees this afternoon. Again, thank you so much on behalf of SAWEA for being part of this conversation. We look forward to continuing these engagements with you in the future. I wish you all a productive day ahead.
Thank you.
Thank you so much. Thanks, Jared.
Thank you.
Nomathemba.
Thanks for that. Have a good day, everyone.
Thanks, Michael.
Thank
Thanks.
you.
Bye. All right.
Bye. Bye.